Hey guys, welcome to Joy of the Trade. On today's episode of Buy It or Burn It, I'm going to be talking about an asset, a precious metal that a lot of people are focused on. A lot of people have been focused on for the past couple of years, which is gold. Gold. And so, my verdict for today, towards the end of January here, is burn it, burn gold. Now, I'm going to qualify this statement by explaining to you that I've been making bullish calls on gold throughout 2020 and trading it from the long side and thinking about it from that perspective. But my mentality has changed here in the beginning of 2021. And I'm going to go through a couple of charts that are going to show you why that I am now saying burn gold. So first off, let's look at this 1-year chart. Gold made this unbelievable move in the summer where it was consolidating for a while here around the $1,700 level. And then it took off in the summer and tested all the way up to 2,100. And it was it did that on a couple of reasons, but mainly we were in a defensive situation with COVID, and the Fed had announced like unprecedented money printing and dollar destruction and balance sheet expansion, and all these things tend to be bullish for gold. But then people started rotating into higher risk stuff. So people started buying stocks with high growth potential, high beta names. Bitcoin had a huge rally, and we saw this big leg down towards the end of the summer. And so we broke back down underneath 2000. We've been doing another consolidation, but this time the consolidation is a lower consolidation, which you can see by these lower highs after that high point was reached in early August, right around 2100. And so we broke down recently. So we have this chain here consolidating. We broke down recently, and it looks like today we're breaking down below the 200-day moving average, which is significant. It's really significant. And the reason I say that is if we go back and we look at historic, let's go all the way back and look since 2006 gold. This is not without precedent in the sense that the Fed in the financial crisis, the great financial crisis, really expanded their balance sheet, which is in this yellow line here. So the Fed went from a $1 trillion balance sheet to over a $2 trillion balance sheet in a really short period of time. But as we were doing that, gold actually started selling off as we peaked. So you see that we're peaking again here with gold selling off. And so I counted these bars. I counted these monthly bars and saw when gold made its bottom. And so from this top, there was 1, 2, 3, 4, 5, 6, and then on the 7th bar, we made a bottom. From this top, we got 1, 2, 3, 4, 5, 6, and then the next is going to be 7. And so from that standpoint, I think we're gonna break down below 1,800. We're gonna get back into the consolidation range of 16, 1,700, and we really could test 1,500. It's not without possibility that happens in 2021. So from a technical perspective, based on the history that we have shown, in the short term, I think this is a very distinct possibility and actually kind of a higher probability bet. A lot of people are looking at gold right now to protect them from this balance sheet expansion, but you have to look back at history and see that although it does turn out to be correct, and I will get bullish on it because I am long-term constructive on gold and bullish on it, I think we could have a rocky couple of months here where we test these levels. Another thing is when you've had the dollar destruction that we've had and gold isn't rallying, not a good sign. Not a good sign for me. And let me just show you that really quick. Hold on a second. So let's look at this dollar index. Dollar index has been in the toilet. So you would expect gold to be ripping, but it's not. And everything else is. Everything priced in dollars, hard assets, I mean. So if you see that this green line, this should be going up as the dollar is going down. Let me give you another comparison. I'll show you copper, what copper's done. copper, as the dollar has been getting killed here, has been exploding, breaking out to highs. That's what gold should be doing as a hard asset, and it's not. So if not now, then when? I really want you to pay attention to that, because I think we could also get a dollar snapback here, which would be bearish for copper, but gold is the saggier looking chart here, believe it or not. So short term, burn gold doesn't necessarily mean short it. I'm not there yet, but if you have like too overexposure to it, it's something to consider. I hope that I've at least given you a different point of view than when you're hearing out there everywhere. And I encourage you to be active in your trading and to be agnostic about how you make money. Don't find yourself being like a cheerleader or a hero for one particular thing. Trade what the market's giving you. And this is a perfect example of that on the burn gold call. Check out Joy of the Trade. Check out Money Links. I have a lot of links where I go long, short, and you would be surprised how often I change that point of view. So be flexible, be agnostic. LFG. I'll see you guys soon.